Welcome to the Wired for Wealth radio show, where you get access to world-class leaders that offer proven solutions for your life and for your money. My goal for you is to help you think better so you can do better, so you can feel better about your financial future. I'm your host, John MacGregor. But before we get into this extremely important and helpful topic, just a quick reminder to ring that bell below and subscribe. You do not want to miss these important interviews. All right, folks, let's dive in. We are absolutely blessed and honored to have Rick Mazur join us today. Rick is an American businessman and entrepreneur. Rick is a risk manager, a day trader, and a real estate investor, managing his own portfolio and outside funds. Rick started in the technology space and used his success there to build his assets and his portfolio. Since he has always had an interest and passion for investing, trading, and real estate, he currently spends most of his days doing what he loves, which is making money at home. As a way to give back and help others, Rick runs a podcast called A Trader's Life, which I highly, highly recommend. And he also runs the Enlightened Trading community for traders and investors who want more information or as a way to trade in real time along with Rick. Rick also has the Enlightened Training Academy, which offers one-on-one personal training and online courses for those wanting to learn how they can build wealth as well. I really, really wanted Rick to come on the show because of how he helps others create cash flow, build wealth, and ultimately discover financial freedom from their laptop at home. How great is that? We share very similar investment philosophies, but Rick, I will tell you, takes it to an entirely different level. And as I said in previous episodes, I'm generating several thousands of dollars every week using a simple trading strategy that Rick is going to share that anyone can do. You don't need to be a stock market analyst, a math whiz, or have a PhD. It's a simple system that anyone can incorporate. And today we're going to talk about that. So with that, welcome, Rick. Great to have you on the show.
Hey, John, how are you?
Oh, it's awesome. Crazy times we're living in, as we were just discussing before the show, but we'll get into that. I will say it's awesome to have you. Thanks so much for your time. This is such an important topic for anyone looking to generate cash flow, grow their portfolio, and I would say, in all seriousness, escape the rat race. So, as I always do, why don't you start by telling us a little about yourself, your background, and maybe you could give us sort of a 30,000-foot snapshot of what you do and how you help people, and then we'll dive into the questions.
Yes, well, I grew up in Chicago, Illinois. I was an only child. Parents got divorced when I was around 8. I bring that up because I believe that, along with the fact that, growing up, my mother struggled. We didn't have a ton of means. It kind of shaped me into the person I am today. And what I mean by that is that I knew early on that I wanted more for myself. I knew that if I was going to get it, I have to kind of figure out a way to do it on my own. And I don't know how I knew it. I just knew it. And now at the time, I didn't know what that would be. Still, it kind of just created this drive in me, this kind of never quit attitude that kind of gave me the courage and the passion to kind of ultimately, kind of fight, never quit until I succeeded at something. Growing up in my early adult life, I had small jobs with buddies of mine and things like that. I was always kind of business oriented. My first real success was an internet company I started with a friend of mine in the tech industry. We're talking like 1995, 1996. And we provided internet access to homes and businesses kind of before it even became mainstream. We were one of the first to dabble in internet video streaming, web hosting, web design. This is way back when. Digital rights management, which is used today to protect films like Netflix and Netflix shows and stuff like that. So I was proud of what we accomplished there. We were pretty underfunded to compete with what became as the ultimate big players that we know today. But we did okay, and I wouldn't change anything about that at all. That's kind of how I started.
That's awesome. So you're way ahead of the game in this internet world. That's amazing.
Yeah, I mean, pretty much when there was no manual, there was no books, there was no college courses, they started to come out with books. That was when you kind of went to Barnes and Noble or wherever your local bookstore was, and you literally had to either buy it or we read it there. And it was just, there was no college for it and stuff. So it was you kind of got some machines and you kind of just dug in and kind of figured it out, building my own computer systems. I mean, again, this is back before, companies, they all do it now. Dell and HP and all these companies build their own machines, and, you can order them, have them sent to you. But this is before that was even, this is when they used to use middlemen to sell their computers and stuff. And, nobody really knew, the inside guts of the machines and everything like that. So yeah, you really kind of had to just get your feet wet and just, play around and stuff. So, but it was fun. I wouldn't change it. It's a lot different now, of course, but that's how I started before I kind of got into the trading and things like that.
But it's sort of the theme of the show is just, there's so much hesitancy of people to take that step forward and explore new ways, right? To get out of that paycheck, the 9 to 5, yet there's so much hesitancy. And sometimes it just takes jumping in, picking up a book, watching a podcast, or, listening to a podcast, whatever it is, educating yourself and then diving in. And it's sad so many people are afraid of that. But I do want to address that more and why you think that's the case. But so currently you're a full-time trader and investor. How did you get your start in this?
Well, at the time, is trading wise, all I knew was stocks. I wasn't aware of derivatives such as like options and futures. Even when I started trading stocks, as a matter of fact, I never knew that you can short a stock, which means taking a position that it would go down. I thought that all you could do is buy. I was always fascinated that you could pick a company that you thought was run well. And kind of as the American public bought their products and services, you could kind of invest alongside them and participate as their stock increased in value over time. When I was running my company full time, I simply didn't have the time to trade during the day. So I would get stock picks from others. I'd try to pick my own, kind of mess around a bit. And around 15 years ago, I discovered options, which is a derivative, they call them. Other than just the traditional stocks and things. I kind of love the concept that, because with options, you can spend less money, but you can still participate in a decent, a fraction of a stock's move, depending on how you structure the position. If you're trading it, to go up or down or not, there's different ways that you can trade options. But this would allow you to put on smaller trades and kind of diversify a bit. You can trade more frequently, risk less capital, but still make, 50, 60, 80, 90% of the gains that a stock would move. So I found, that trading directionally like that, though, with options just would take a lot of time. And I just didn't have a lot of it during the day because I was still at the company. I also discovered that you could also sell option premium, and we can get into those terms and things like that, but it's just a different way to trade options. Basically, you're not betting that it will go up or down. You basically kind of want it to stay kind of neutral. They used to call it what's called delta neutral trading, but it's not really called that anymore. And I found a good mentor, kind of taught me the ins and outs, started my journey with that. And I realized I could be pretty consistent. Now, if you remember, I kind of came from, I don't know, humble beginnings, whatever you want to call it. And, one of my fears was all traders and investors, if you're going to put any kind of decent capital into this, typically have fears. In fact, many of them have 5 or 7 different things that could potentially cause them to fail as a trader. And one of them is fear of loss. And that's what I had just because of the way I grew up. So even though I had a solid footing and I really knew I could make money, I just traded way too small for too long. And that could be a detriment to you as well. So I kind of just chugged along and I started dedicating more and more time to the trading. And then I discovered futures, and I kind of constructed a mix of options and futures, trading in my portfolio, along with real estate investments and other things to kind of just, kind of to get to where I am today. And then I decided to help others eventually. People, I would always, as a trader learning, I would always go on like Facebook groups and all the trading forums and things like that. And I would just hear people constantly there. I just realized there was a ton of bad information. And it's not because people were trying to mislead other people. It's just that most, unfortunately, just don't know because they don't spend enough time with it. It's kind of, they're doing it part-time. They hop on a forum, they start giving all kinds of advice, and it's not one size fits all, for trading, because everybody's doing something kind of different. So someone takes an idea and then they use it, and it worked for this guy and it doesn't work for them, and they don't know why. So, I started giving my feedback and my input on the forums and things like that. And people would write to me and be like, hey, you seem like you kind of know what you're doing, and then maybe you could help me. So I started that way, and just, started helping people, and depending on what they were trying to do. And that's how I really got started with that.
Amazing. That's just an amazing story, from humble beginnings to now an active daily trader, making money, working from home. You've no more paycheck. It's just an awesome, awesome story. And just for the viewers, just to fully understand what we're talking about, these are options. And when you boil it down, we're talking about a call and a put. And it's a way to have access to these stocks that you may not be able to afford for a fraction of the cost. So for example, if you really liked a stock that was $120 per share, if you wanted to buy 100 shares, that'd be almost $12,000. That'd be $12,000, right? So if you didn't have $12,000, you could buy a call on that stock for a fraction of the cost and still participate in the exact same amount of upside as you did if you just own that stock. A put is if you think the stock's going to go down, and it's the same thing. Instead of selling that stock and having to incur that cost, you can buy a put thinking the stock's going to go down for a fraction of the cost. Now, Rick and myself kind of take it to the next step. In fact, Rick takes it to a much higher step in how to generate cash flow by selling those calls or selling those puts. That way you own the underlying stock, you're getting the dividend, hopefully the growth in most cases, although it's a little tough right now, and then you're collecting rent on that stock as well. So it's a very simple yet highly effective and fairly safe strategy to create cash flow. But Rick, I often hear when I mention the term options to people, even stock people that buy stocks, you often hear the skepticism. Oh, that's just gambling. Options is crazy. You're just wasting. It's too risky. How do you respond to that?
As far as gambling, well, trading, unfortunately, trading can be gambling. It's an interesting question. What I mean by that is that if someone hasn't proven out a system with the correct number of occurrences to show that they have an edge, and they have not proven that they can reasonably execute on that edge most days, then yes, the person's gambling. They're just basically throwing their money into the market, and they don't really have it. You got to come in with a plan. Now, if we go off the assumption that the trader has done these things and he does have an edge that provides for what we call positive expectancy, then no, the trader's not gambling. If the odds are in your favor over many occurrences, you're simply not gambling. For example, one may say that a casino, the owners of the casino are gambling because they're actively participating in the game with you. If you take blackjack, the house risks their money because they have to pay you if you lose. But in reality, they're not gambling because over time they never lose. They've proven that. Short term, 1 week, one day, possibly, but not over time. And why? Because they have a statistical edge versus all the other combined players who play the game, and how those players play it, they know that they're going to win. So the same holds true for trading. If you have a system that you can put in place that you can do day in and day out, and you have a rule set that you can follow, and you know that, hey, I might lose here, might lose there, but over the course of 10, 20, 50, 100 trades, depending on how active you are, you're going to end up green at the end, or up money over time, then it's not gambling, because you're just playing out your statistical edge that you've proven. So it can be, and unfortunately, many people do gamble if they don't have the right information. But I hear that a lot from people when I tell them what I do, and then that's typically the answer I get. Oh, that's pretty risky, huh? That's just gambling. It's like, no, it's not necessarily, but you have to put the time in, and you have to really kind of understand what you're doing.
Yeah, there's no get rich quick scheme here at all.
No.
As I always tell people, you need, like you said, a plan. I use the term process. And if you have that process based on the education that you have and the mentorship that you have, you could put the odds, the probability in your favor that you will come out on time. Not every day, not every week, but consistently over time you will, when you have that process, and that proven and effective process. So Rick, can we shift gears and talk about your strategy that you use?
Sure. Well, I have multiple strategies. I mean, when I typically trade I've got everything kind of broken into baskets. So let me try to give you an example. There's different risk and loss management for different type of strategies. So depending on how someone may use a particular market or an instrument, that would depend on the type of risk management that is employed. Because at the end of the day, the strategy involves risk management. It's all about what can you make versus what can you risk. So you have to be consistent with what you're doing. So for example, when I buy the market with futures, which is one way to day trade. I day trade futures. I don't ever position trade or swing trade. I'm always flat at the end of the day because of the leverage. You can make a lot of money in a short period of time. You can also lose. Of course, you're going to have a stop loss, that maximum that you're going to risk per trade. But I don't sit there and try to hold futures overnight. Some people do, and there's ways you can do that, but I just personally don't. So my particular strategy,
In a future.
So futures are basically based off of, I mean, you can buy futures for anything. It's basically an instrument that will allow you it trades 24 hours a day, and it's pegged to the actual cash market. So, but you can trade it 24 hours a day. You can trade it in the middle of the night. Now, there's not a lot of volume that goes on in the middle of the night. It is tradable. I mean, it moves, and there are people in different time zones that have to trade it in the middle of the night. But it's basically, so in other words, if the futures are moving pre-market before the stock market opens, and the S&P futures are down, 50 points, it's pretty guaranteed you're going to get an open that's down around 50 points in the cash market. So you can kind of gauge what's going on. And what it allows you to do, and many people have different uses for it, but let's say that you're long a portfolio of stocks in, let's say, the NASDAQ, and you buy a lot of NASDAQ stocks. And say a bomb goes off, nuclear bomb goes off, something bad happens, and you wake up and the futures are down, 200 points or something like that, 300 points. Well, you don't have to wait for the cash market to open. You can actually go in there and you can start hedging what you have on and things like that. Now, it doesn't make a lot of sense to do that in some cases unless your portfolio is big enough. But you can. They've introduced smaller futures instruments, like micro instruments that are smaller. It didn't make sense to do it with the old way that they had it, because if you didn't have a $50,000 or $100,000 portfolio, because of the leverage that the futures amounts, you really couldn't hedge in any meaningful way. But now, since they have smaller instrument sizes, you can use it. You're able to do that. So it's just another way to trade, another avenue that you can trade it. But the leverage, so one futures, like let's say if you take the S&P is trading at for 3,900 right now. So in the futures, it's $50 for a point move. So basically, if you take 3,900, I don't even know what that is, times $50, you're basically, with one futures contract, you're basically controlling $200,000 worth of stock, essentially. Now, people get scared by that, but the reality is, again, if you make a 2 or 3, 4 point move in the S&P, you can make $200 a contract, but you're still going to have a stop loss. You're still going to, you're only going to be risking 3 or 4 points. So that's where it comes down to your actual day trading strategies. You have to know when to get in, how to get in, what bars to get in, what time of the day to stay away from. And I have an entire system based off of price action and support and resistance, and knowing what to watch out for. I don't trade the news. I don't try to get involved with all that volatility because there's really no need. Now with options, it's different. Like we had talked about buying a call that you had mentioned and buying a put. You had mentioned the covered call strategy where you can own the stock and sell calls against it and collect the time premium. I don't actually ever own the stock myself. When I do this, I basically employ basically puts and calls, typically with more complex options position. And what I'm doing is I'm just selling these calls and puts to other people, and I'm just trying to manage my position to where, because the put and call decays in time, the price of it decays in time. Let's say if I collect $1, well, I want to sell it back and buy it back for 50 cents. So I want to basically let that premium expire. Now, if you're buying a call, you have a problem, because even if the stock doesn't move in your direction, it's costing you time premium, where I'm selling that to you. So it's, there's a different, we can go on for hours and hours just about the intricacies of that. But I basically am, and the reason why I do it that way personally is because I typically will day trade the futures a lot of times in the morning. And, it requires you to, you have to stare at the screen. You have to kind of really focus and concentrate. And I didn't want to have to do that all day. So, and I also hold my options positions longer than a day. So I'm in them for sometimes 2-3 days, sometimes 2-3 weeks, depending on the position I have on. So those strategies are a little bit different. So, and I have a lot of information about that, like on my YouTube channel and things like that. I give examples and stuff too. So it's just different. And then I do real estate stuff. I do some crypto stuff. Crypto, I just buy and hold. I'm not trying to play a game. I'm not trying to intraday. Crypto is very volatile. It's going to go up. It's going to go down. Typically, but over time. And if you believe in crypto, especially certain types of, crypto coins, I just put it in and leave it, just like gold. They say crypto is the new gold. But I have a little, I do gold too, but that's, again, more buy and hold stuff. And then, real estate investments. So, you kind of take this whole portfolio, the ideas, and you kind of mix it into multiple baskets, and you allocate a certain amount to each basket based on what you're looking to make or what you're expecting to make in a given time frame. And that also allows you to better manage times when they're tough. If I've got time premium, I'm collecting in options for longer dated option strategies. And let's say I'm trying to collect, just throw a number out there, $500 a day. Okay. And then let's say the futures are beating me up one day because it's whipping around and stuff, and I lose $1,000 or 500. Okay. Well, but I'm collecting it in the options. So it's kind of like more of a break even. Now you could win in both and you can lose in both, but the idea is you're typically not, that's not going to typically happen as often if you structure it the correct way. And that's typically what I do.
So that brings up a good point about risk mitigation. I want to talk about that. One is stop losses. One is just having your eggs in different baskets. So the market's down. Last I checked, 1,000 points as we just started this. Yes. The S&P broke through 4,000 on the downside. I mean, this is an ugly market. I mean, you can't really hide anything. You can't hide in the stock market, the bond market, crypto market. Cash is getting destroyed by inflation. Even gold is taking a hit. So what do you do in these types of environments?
Well, I personally, if you're talking about, like, I'm trading whether the market's up, down, it doesn't really matter if I'm day trading or whether it's options or futures. If you're talking about people who have stock positions and things like that, I'm personally about, I have a portfolio that I use for stock, but it's more buy and hold, ETFs, funds, things like that. I'm about 10% invested right now. I hear that comment a lot that you make, and it's kind of hard to swallow for me, because nobody complains when it goes up. I mean, the market's been going up 30, 40, 50, 60, 70% over the last 10 years, 5 years, whatever it is. I have to look at the chart. And then the minute there's a 20% pullback after it went up 120%, everybody starts crying. It's like, we're really not, it's down on the year 20% or 15%. And NASDAQ is a little more. The S&P's, it might be there after today. I don't know. But what about the last 4 years when you made, the average return on the S&P over time with dividends is about 8.5%. And you got people getting 15, 20, 25%, 3, 4, 5 years in a row on average. And then it goes down 20%. And it's like, so I, I wouldn't be in the market with fresh money now. Unless it pulled back. So I started, for example, I started to dip my toe in the water a little bit. Now, again, I'm an active trader, so I don't need to be in. Like if you have a job and you just need to put your money somewhere, set it and forget it, dollar cost average, whatever you want to do, that's fine. But again, over time, you're up. You cannot worry about 1 year or one problem, and everybody knew this was coming. It's not like we didn't know. In fact, people were saying this for the last 2 years. If you didn't participate for the last 2 years, you lost out on a lot, but everybody knew this was coming. So it shouldn't be a shock. The uneducated, or the people who don't know, who think, well, now's a great time to jump in when we're at 4,800 or whatever it was at the top. Well, that's just not the way it's done. You can't time the market that way. Just like you can't time it on the way down. Like I'm willing to put some money in right now, not half, but I'm willing to put some money in right now. But if it goes down more, I'll put more in. And I also know as I'm sitting here today, that it might stay down there. It might stay down there for a year. I'm not saying, we're not going to jump. We're not going to go down like what happened with COVID, where it's going to go down. And COVID was an artificial shutdown that forced everything to kind of, businesses couldn't make the earnings because they physically weren't allowed to open in some cases. And then as soon as it opened again, boom, everybody jumped ahead of that and put their foot on the gas and went. This is more of a problem where you have interest rates going up with inflation and things like that. That's going to cause people not to be able to borrow money as much. Interest on car loans are going to be more. Everybody knows what the food costs, the gasoline prices. So, and this is maybe one of those things go away or two of those things clear up, but not all 4 or 5 of those things are going to clear up. Now, I'm not saying it's gloom and doom. I'm just saying I'd be shocked if we went up to the highs in the next 6 months. I mean, I'd be shocked. I mean, and I'm not going to say it can't happen. I'm just saying I'd be shocked. Therefore, I'm not rushing to put money in. You're going to have an opportunity to put money in. You're not going to miss anything. The market yesterday was up 70 or 80 points. It's down 150 today. Everybody yesterday was contacting me. Oh, did I miss it? Did I miss it? Because it went down. You didn't miss anything. You're going to have plenty of opportunity to buy, in my opinion. Now, again, that being said, if you're talking about stocks, you're talking to a guy that has, probably 5 to 10% of what I risk in the market. I mean, that's what in stocks. I mean, that's when I'm fully invested. I mean, I don't believe it. I mean, because it doesn't make any sense for me to sit and have the money in stocks when I'm sitting here trading to make 8% a year on average. I can make 8% on a trade in options. I mean, so, it doesn't make any sense, now again, they don't all win. So, you don't end up, but that's just the way I do it. And everybody's different, so.
It's interesting over the years, anytime the market's at an all-time high, that's when everybody wants in. That's when I'm getting the phone calls. John,
you do, yeah.
It's like FOMO, fear of missing out, right? And when the market's tanking and on sale, no one wants to have anything to do with it,
No, not at all.
Costco, right? To save money. We buy these giant boxes of toilet paper and Legos, right? And barely fit in our car.
Right.
Suits go on sale 50%. We buy 2 of them, right? But when the markets are on sale, when these great companies with great track records that are selling products and services that everybody needs are on sale, everyone's like, I'm out, forget about it. And they just continually do the same thing over and over again. They're buying high and selling low. It's just human emotions, and that's been a great destroyer of wealth over time. So
and I'll be honest with you, this is a very, I don't want it to get to be too complex of an answer, but this is kind of what I mean when I talk about all the bad information out there, because there is something to be said about buying high on strength, but you're talking about more of a day trading type of situation. I mean, or maybe a couple of weeks where the market's, but the problem is people hear that and then they say, oh, market's strong, let's buy. But by the time they hear that the market's strong, it's already been strong too long, and all the smart money, quote unquote, is already bought and is on their way out. And they're just trying to get every last bit of buyers to come in and buy by the time most people hear about it. So it's not that what they're thinking isn't bad. are wrong. It's just how they're applying it and how they're using it. It's not really good. You don't use that philosophy for a more long-term stock or ETF hold. You do kind of what you said, you kind of, when the stocks are on sale. I personally, people ask me sometimes, what was one of your biggest mistakes that you ever made? The worst thing I ever did was, because remember, before COVID, the market was high. The market was up a lot, and I wasn't going to buy. I said, as soon as something happens, here's my levels. As soon as we started hearing about COVID and we started hearing how bad it was, I'm like, this sucker's going down. I had my levels. I had everything all set, and I'm buying as this goes down. Now, my plan was, which I normally do, was to buy a position. Once I'm fully in my position, I would take half off when the market went up, and I would just hold the other half. The problem with COVID is if you asked traders, 100 traders, when it was going on, when the market was dropping from COVID, how many of them thought we were going to go lower? Almost 100 out of 100 would have said we were going to go lower. Nobody, because that's just typically in the years past, that's the way it's worked, without getting too much into that part, but so I bought about half of my total position. I was prepared to buy another half if it went down, but the market just shoots up. And because I only had a half a position on, I just figured I'll just get out, and then I'll just rebuy when it goes lower, and I'll double dip, so to speak. And I got out way too soon. I was mad at myself. I made money, but I only made probably 20% of what I should have made. And more importantly than losing the money, or not losing the money, I didn't lose any money, but the missed opportunity was I didn't follow my plan. And sometimes that happens when you get caught up. I mean, I bought Chipotle at like $400 and something. I bought Disney at like 70 on the lows. I mean, my levels were spot on. I mean, Delta, I bought it like $9 or $17. I don't even know what it was. The absolute lows. And I had a pretty healthy position sizes in those. Now, I made 30, 40% in a month. And I thought I was a genius, because again, I thought it was going to go back down again and make a new low, and then I would buy more and I'd redeploy. Instead of that, averaging in, I'd put the whole thing on lower, and then I'd have even a better price. Didn't work out that way. The market then proceeds to go up 50 or 100%, and I wasn't in because I had sold everything. Now, again, I made a little bit of money, but so you can't play Monday morning quarterback with it. But the important thing is, to your point, when the stuff is on sale and you see companies that are trading, like I think Amazon right here looks pretty attractive. I mean, I'm not really a stock picker. I do buy certain things. I'm getting my son involved in stocks, and we have these discussions, about different stocks, and Disney, different things like that. I know Disney's in the news. But we can talk about whatever you want. I can go on and I can talk about this stuff all day long.
It's funny. We all play, what's the term? Monday morning quarterback, right?
Right.
But you can't go broke making a profit. That's what I tell people. You can't look back. You still made money. And so let me ask you, do you have a favorite asset class?
Favorite asset class that I personally prefer is futures. That's just typically what if you told me I could only trade one thing, it would be futures. Now, again, I as I said before, I only day trade them. It's just a very pure market. You can make more, as we talked about with options, when you were saying, you can put less in and you can make more. With options, depending on your broker, you're getting typically, it depends on the broker, 5 to 10 times leverage from stocks. Futures is like 30 to 40, 50 times leverage. So you can lose also. But again, it all comes down to those statistics and probabilities. And then options would be second. Again, if you told me I could only trade one, futures first. If I couldn't do futures, I'd do options.
How much time?
I just
every day. How much
time?
are you doing this? Yeah.
Typically in the futures, I'll do morning session because the morning session is the most pure on the chart and it usually provides the most volume and the best movement. You can get movement all day on days like today, or days when the market moves, pretty good. But most of the time, your best time to trade is in the morning. Like when the cash session opens, I'm in Eastern time zone, so 9:30 to say 12. And then you start getting into, you've got your stock, Wall Street in New York, and then you've got your options exchange, which is in Chicago, which is Central time zone. So you actually have a 2-hour kind of what we call lunch window. So if you're in the Eastern time zone, it'd be like 12 to 2, which would be 11 to 1 in the Central time zone. And typically you'll see a lot lighter volume, slower movement. So I try to get my business taken care of, in the morning on the futures. And then I'm managing my options positions all day long. But again, sometimes I don't even have to look at them. You can set alerts. Options, it's a little bit harder to do that the way I trade them, although it is possible to trade with bots and things like that. I don't do that. And then, again, I'm looking at stocks, I'm looking at ETFs, I'm looking at gold, I'm looking at crypto, just to kind of see where I might want to buy some more, because I don't really sell that. I don't, we call it trading around a position. I don't typically do that. Now, if gold, I have a lot of gold lower. If gold goes up to 2000 or whatever, 2100, I might trim some on my position or whatever. But, you're talking about months. I'm not sitting there on a day-to-day basis doing that kind of stuff. But yeah, no, I love my futures. I trade the S&P futures, the NASDAQ futures, crude oil futures, sometimes gold futures, but not as much. It's not as liquid, but I do some gold futures. And again, that's me, but yeah. I know traders that do all kinds of different things. There's no right or wrong.
So Rick, for the 9 to 5er out there watching or listening to this, is it possible for someone to supplement their income if they have a job?
Sure. I mean, again, like I said, there's many different ways to trade options, and it is certainly possible to trade them part-time. Futures is a little bit difficult. You could swing trade them, but again, I wouldn't want anybody to start there if they were trying to get into this and they had a little bit of time. Options would probably be the better way to go. We see this most successfully, especially people that have a job, selling time premium like I do, using proven strategies. And you can do it. You can use alerts. You can use scripting in some cases to kind of automate things. Again, I talked about the bots. You can use all that and still have a job. Now, some of it, depending on what type of positions you were going to structure and everything, would depend on your access to the computer throughout the day. So for example, if you have a job and let's say you can get on for 5 or 10 minutes, or during your lunch, you can get on, then your boss doesn't care, or a break or something like that. This becomes much easier because, like I said, you can set alerts. You can set automations to trigger trades in case the market moves. And then, if you go to lunch at 12 o'clock and something got triggered, you can quickly go and set up another adjustment if you need to do. Now, if you don't have access at all during the day, you can still do it. It's just, you have to really employ certain type of strategies, more longer term duration options positions, and you would want to then try to collect more time premium and just not adjust, just have it's either a winner or a loser, and you're not kind of managing what we call managing the position. But yeah, it's certainly possible to do 100%.
Yeah, for me it's 20 to 30 minutes on a Monday and then I'm done.
Yeah.
I'm not doing anywhere near. I'm probably missing out on a lot of opportunities. I've got a lot of other things going on in my world. But for me, it's 20 to 30 minutes and that's it. And it's generating nice cash flow very easily, very simple.
No, it's not hard. If you just have to have the right strategy for, number one, your knowledge, and number two, the amount of time, like you said, to have. If you want to put 30 minutes or an hour, and you have that time before you start work, depending on what time zone you're on, for example, you might set something up a certain way. And that's what we help people kind of, okay, here's where I'm at. Here's my level of skill. Here's the time I have to put into learning some strategies to employ. Here's my bankroll that I have to work with, because it matters. For example, if you're trading options and if you start making adjustments too many times, you get flagged as what they call a pattern day trader if you don't have at least $25,000 in your account. So depending on what you're doing and depending on what your bankroll is, you may have to do things a little bit different of a way. And again, it's just a matter of putting that knowledge in people so that they can set themselves up, to best try to succeed, especially while they're kind of learning and trying to, perfect their craft.
So, having said that, I think that's a great answer. Given your experience in helping and coaching so many people, what do you think holding people back from exploring something like this? I mean, perhaps you can dispel some myths people believe in that aren't necessarily true.
What's holding people back from starting?
Yeah.
I think a lot of people are scared. I think some people consider it, would consider it gambling. I think some people don't know which strategies to employ because they, what happens with traders that I see, and they hear the stories. Everybody hears the stories. What ends up happening is they hear of somebody who lost a bunch of money and they don't know where to begin and they don't know where to start. But everybody just says, you just have to start. You just have to do it. There's never a perfect time. It's like having a baby. Everybody used to tell me before I had my first kid, there's never a good time. You're always going to be too busy. There's always going to be a better time. And what happens is people get frustrated, and unfortunately they start without having a proper plan, or they just never start because they're afraid of losing money. At least that was what it was for me. You really you just can't jump in and start just buying. I mean, you really kind of have to know. Otherwise, what ends up happening is you just whipsaw yourself. You make money, you lose money, make $1,000, lose $1,000, make 500, and then you just get frustrated there because you're just spinning your wheels. So the important thing that I would always recommend to somebody is, if you're thinking about starting and you're hesitating, you find a mentor, find anybody who knows more than you, learn from them. Because I always hear people say, when they're trying to look for somebody, oh yeah, my friend Joe, he's doing it, but he just lost $100,000 on options or whatever, in COVID. And so I can't go to him. Well, you know what? Just because that guy, first of all, if he's willing to invest that kind of money, he probably, either he's loaded or he kind of really, he knows something. Nobody's going to just throw that kind of money in. Just because you're having a rough spell or a bad patch doesn't necessarily mean you don't know what to do. You may not be able to capitalize on it because you don't do the right thing. You get greedy, just because that happens to you doesn't mean it's going to happen to somebody else. So you can always learn from other people. Anybody who knows more than you, if a guy says, hey, I've been trading options for 3 years. Okay, find out what he knows, but again, you have to go slow and steady. This is a marathon. I always tell people it's not a sprint. There's always tomorrow. You don't need to make $5,000 in a day, because the people who swing for the fences like that typically give it all back, typically. So slow and steady wins the race. Find a good mentor, somebody that can help you. And we have a trading community, which we can talk about later, where people are, kind of go on and they can find other people, accountability partners if you're a day trader, or just, hey, I got a question, I'm looking to start, here's what it is. I answer some of these things sometime when I'm in there. I'm not in there all day because, I'm trading and doing other things, but there's other people that will answer and things like that. And it's free. You can join the free trading community. But again, you might know somebody who trades. They might be on a Facebook group or something like that. Anybody who's willing to spend time with you, I recommend gathering that information, and don't be so. Make sure you back test your strategies first before you get in and start doing it, to make sure before you start putting money in, because again, you don't want to just start, I'm going to throw 5,000 in and buy Microsoft. and then I'm going to sell a call. Yeah, well, you got to know what it's just, you could have a bad experience. And the problem with having too many bad experiences in the beginning is that will cause you to hesitate even more. Let's say you hesitated for a long time and then you finally build up the guts to do it, but you didn't first spend the time to prep yourself properly and make sure you have the right information. You're going to lose money, and that's going to set you back another 2 months or 2 months or 6 months, because now you're going to be like, oh, see, I was scared, and now look what happened. I lost. You only lost because you don't have the experience. Now, I do agree at some point you do have to jump in, and you do have to put real skin in the game and real money. Otherwise, it's not the same as like paper trading and stuff like that. But there's a process, in other words, that if somebody's thinking about it, they should think about A, B, C. You can't just jump from A to Z. You gotta go through the process of it. That's what I've seen that's worked best with people over the years that I've talked to and that I've seen come up.
I've heard so many people over the years like, oh, I tried that stock thing and it was a disaster. I lost money. I'll never do that again. And then you ask, how did you get into it, or what was the plan, or what was the process? You say, well, I got a stock tip from somebody, in a company they never heard of that has some great product that's going to change the world. And of course it didn't happen. And so they're like, I'm not touching that. And it's so interesting. People spend more time analyzing which new smartphone they're going to buy, or new vacuum they're going to buy, or flat screen TV, than they do spending 10, 20 grand on a stock just because somebody told them about it and their products sound cool. So the key here, and what I'm hearing you say, and I completely agree, is you've got to have a plan. You've got to have a process in place. Otherwise, it is gambling.
Yes.
So with that, I do want to shift over to what you're doing, Rick, and how you're helping people.
Okay.
You help people become better traders and better investors. I mean, some of the stuff we talked about, I think people are going to say, wow, that sounds really complicated, futures and calls and puts and writing calls and all this stuff. How do you help people, the average person who doesn't understand this stuff but wants to?
So multiple ways. I have my main website, which is just www.rickmazur.life, RICKMAZUR.life. It's got my podcast on there called The Trader's Life. There's a mailing list that would be great to join because we send a lot of different information, and we only want to send you the type of content that you want. So if you're only interested in the podcast, you can actually select, hey, I want trading emails, or hey, I want podcast only when a new podcast episode comes out. So, you can always, manage that mailing list and tell us what you want.
This is for anybody with any level of education.
Any level of education. I mean, the podcast covers, it's going to cover more in-depth trading episodes. I'm going to be doing more than like one a week. I'm going to be doing, but I'm also doing interviews. And it's wide ranging. We've got guys on there doing real estate syndications. If you're interested about, investing in real estate, crypto, we had a crypto guy on there, Jimmy Song, expert in crypto. Just general stuff. So, and basic stuff. So basic, advanced. So any level that they're at, that we can help them. The trading community as well is the same thing. So if you go to the website, all my social medias are on there, and we're going to post different things. Like for YouTube, it's going to be different type of videos based on what we post on Twitter, based on the different type of trader that people are, because YouTube is kind of set up for different type of, more visual information. Obviously, where podcast is more audio for people listening in the car and things like that. And anybody who's looking to learn about the trading and investing, they can also join our free, like I was talking about, the free trading community. You can link to that from the website as well under the trading section. And if you're an active trader, or you want to be an active trader and kind of follow along with futures or options and things like that, we've got trade rooms as well, resources, one-on-one training, e-courses. So everything you can find on the website, and there's kind of something for everybody. And again, you can link to the community. The community is just enlightened.rickmazur.life, but you can link to that from the main website as well.
We'll have
in the menus.
In the show notes. But I'd also love for you to share with the audience the Enlightened Academy. How does that work?
So the Academy, right now, we have the one-on-one training that we're doing. And we are going to be, a lot of people have asked about e-courses and stuff like that. So we're going to be, we're in the middle of recording it right now, more e-courses for people who don't necessarily want to do one-on-one training. They can kind of learn on their own if they think that that's more beneficial to them. And again, you can link to you can link to all that from the website and get more information on it. So whatever you're looking to learn, if you want to look options, we have an options program. If you have futures, you have a future. We don't really do stock too much, stock picking. Although in the futures learning, if you wanted to do one-on-one training and only focus on stock, the technical analysis, this is another kind of misconception that people have. People think like, well, I do good in day trading futures, but I don't do good in options. That's nonsense, because a chart is a chart. I can pull up a chart of Amazon, Netflix, Microsoft in intraday, and it's the same setups that I would use to buy or sell as I would do with the futures. I mean, so once you learn how to navigate, the chart, so to speak, that's what we have, a course that will just teach you how to read the charts, whether you're doing it for day trading, whether you're doing it for more swing trading or longer term, you're looking at different time frames. And because you're looking at different time frames, you have to read the chart differently because the candles mean different things. Like if you're looking at a daily chart or a 4-hour chart versus a 3 or 5 or 15-minute chart. So if somebody's looking, basically what we do is we assess. When you go on the website too, you can also click the link to schedule a call with me, a free call, or if you prefer just to use a contact form, you can do that. If you prefer email. And what we do is we assess, what are you looking to do? It doesn't matter. I'm looking to buy stocks part-time. I'm looking to be a full-time options trader. I'm looking to just learn more and get my feet wet. And maybe I'll put some capital in down the road. I'm saving my money, whatever it is, we'll tell you, okay, or suggest to you, here, this is what we recommend, based on where you're at, because some people are very, very green, meaning, they just don't, they really got to have their hand held from the beginning. And some people are kind of like, yeah, I've been doing this and most of the people that we hear from, probably 70% have done trading before. They've dabbled and they've lost. So I hear people that have anywhere from 3 to 15 years in the market, and they've lost anywhere from 20 to 300 grand in the market. I mean, and they're still going. Most people end up quitting because you lose 50 grand and, or 20 grand, 10 grand, and you're just like, all right, this isn't for me. And they quit. And that's a shame, because if they love it, it's probably just they didn't learn the right strategy. So, and the right way to employ the money that they had given with the time they had to learn and everything like that. So, I recommend, ask questions, shoot me an email, schedule a call, whatever, and we can see how we can help you in any way.
Awesome, Rick. Thank you so much. I mean, we could spend hours, even days, talking about this stuff. I hope you'll come back, because I think there's a lot more to uncover and a lot more to discuss, certainly in these markets, because a lot of people are scared, they're nervous, they're freaking out, they're looking at their 401k statements, and they're worried, and they're looking for some way out of the current 9 to 5, the paycheck. And too many people I see, they're living on what I call Pain Island, and they're looking for a way out of that. So I will tell you, folks, there are so many ways to achieve the life you desire and the life you deserve to live. And Rick is offering an avenue for you to do just that. And so all I'd say is just get involved, get educated, and free yourself from that paycheck. It is not rocket science. I mean, some of these things, there's a little bit of a learning curve, but once you get over that learning curve, I'm telling you, you can do it. There's so many people that are living proof of that, especially now, especially in today's environment where there's so much uncertainty. You can do that. So check out his community, check out his academy, get his newsletter, reach out to Rick and spend some time on the phone with him. He's so good at it. And he's a pure expert. And this could be a life-changing episode for you and your family. Lastly, don't forget, I've got several resources on my website that you can download today to start your journey to financial freedom and peace of mind. And once again, don't forget to hit that subscribe button below, because you don't want to miss these interviews going forward. So with that, until next time, thanks, Rick. Any last comments before we shut off?
The only one thing that I would say that I forgot to say was that because you had talked about people who were new, I just did an episode. It hasn't came out yet with my son who's 14, and he's looking to do options. I'm actually teaching him. So we did an hour and a half interview. It's actually going to be a video interview on YouTube and probably audio. And it really. It's not just for 14-year-olds. If you're new and you're 30 and you're looking to learn, he really asks questions like, that people would want to know. And I'm going to set him up. Actually, it's got to be in a calendar mind, but I'm going to set him up and we're going to follow his journey along. So my theory to that is, hey, if a 14-year-old can do it, if you're 30, 40, 50 years old and just starting, you can do it too. And I want to show people that. So again, you can, again, if you subscribe to the YouTube or the website, email, whatever, you'll get information on that. But I just thought that would be something that somebody who's maybe new and unsure or whatever, hey, can I do this? You can kind of follow along with that journey, and you can see for yourself, and maybe that might give you the encouragement to start yourself.
That says it all right there, Rick. And I will add to it. My 91-year-old father started trading options. I'm serious, when he was 87 years old, and now he's making $10,000 to $15,000 a month writing covered calls. A very simple strategy. It's a hobby for him. But anyone of all ages can do this. All you need are two things. You need a process that works, a proven process that doesn't work every single time, but consistently works over time. And then you need mentorship. And that's what Rick and his organization is bringing to you. So again, Rick, thanks so much for your time. Just a ton of gold nuggets today. And we hope to see you back again shortly. So until then, next time, upward and onward. Take care. We'll see you again.
See you guys. Thanks, John.